It doesn't take much these days to spook the stock markets. Over the past 5 months, the bellwether Standard & Poor's index of 500 leading stocks had, until this week, risen by more than 50%, but then tumbled through heavy selling, as stockholders decided taking profits was safer than staying in and counting on a bigger rise.
That's the big problem here, sustainability going forward. Markets are saying, you know what, maybe we're a little ahead of ourselves, let's back off a little.
Another reason, American consumers, like investors, are still cautious. Why? Household debt now accounts for 128% of national output, so families are cautious on spending. And there's evidence that company directors are selling stocks in their own companies.
It's psychologically negative to see the amount of insider selling that's going on, and sometimes it's nothing more than just the fact that we've had strength in the market. You've got a lot of insiders that haven't been able to sell, or certainly been able to sell in the market, and are trying to take some profits while they can.
On the credit side, we have US Department of Labor figures showing an increase in productivity, good for efficiency, though not necessarily for jobs.
The economy has actually bottomed, and this is, I think we are facing a positive quarter, and I think it's largely due to the stimulus.
I think Mr. Soros is correct. If you look at the ratio between inventories and retail sales, you'll notice that the American consumer actually has not cut back on their purchases by any large margin, really only in vehicles, and even that has rebounded in recent months. And so we've gotten to the point that suppliers actually have to start placing orders with the producers, with the manufacturers, in order to keep goods on the shelves. We're experiencing a recovery in terms of consumer spending. That's 70% of the American market right there. It makes perfect sense that the recession, if it's not over already, is about to be.
Across the Atlantic, Germany, that's Europe's biggest economy, is off the starting blocks again, with growth of 0.3% in the second quarter, bringing an end to recession. Chancellor Angela Merkel's stimulus package provided cash incentives for people to trade in their old bangers for new autos, and this helped, as did the increase in machine exports through the port of Hamburg. And in Paris, the consumers returned to the shops, providing France with an identical growth number to Germany's. But bankers are cautious.
Effectivement, ce sont des chiffres de croissance plutôt encourageants.
The figures are encouraging in that we have an improvement in the second quarter over the first quarter, but that said, we shouldn't forget that the second quarter growth this year is less than in the same period of 2008, so we still have negative annual growth.
I was surprised, but not as surprised, I think, as the German and the French governments were. They have been preparing their populations for a long, in-depth recession, and to see positive numbers coming out of the blue surprised everybody. Whether or not these numbers will hold the test of time, we'll see. The Germans and the French have some serious problems in their banking industries, not nearly as severe as what's further east in, say, Latvia or Hungary, but serious nonetheless. And until they deal with those problems, any growth that they have is going to not last.
The biggest surprise this week came from Tokyo. The world's second largest economy, Japan, has been stagnant so long, no one expected any rise at all, let alone a spurt of 0.9%. But then, elections are at hand.
Japan has a reputation of two things. One, generating growth statistics that are then heavily revised, and two, going from very high growth to very negative growth in a very short period of time. Mostly that's because the Japanese economy is broken. Their demographics are awful, their prospects for independent economic growth are not particularly positive, and they've been facing a deflationary problem for the last 10 years. And so about the only way that they can experience growth is if they pump a lot of stimulus into their system, stimulus that's paid for with deficit spending. That's what they've done here. But just like the last 15 years, there's no reason whatsoever to expect that to stick, because as soon as they stop pumping in the stimulus, they're probably going to go right back to where they were, which is the deepest recession that they have had in 60 years.
No one would claim that the world economy will be racing ahead in the months ahead. There will be many twists and turns, but some major economies do seem to have turned the corner. Colin Chapman, www.stratfor.com.